Welcome back. Well, the market's a little bit wobbly ahead of that big event for the time being. We're consolidating in this range, a 25-point downtake. The bulls will take it and just hope that the Fed has a surprise. Maybe they don't sound as hawkish as what global equities have positioned themselves. If that's the case, we could be very well be seeing a quick near-term relief rally. But that we'll discuss tomorrow. For the time being, let's focus our attention on the cement sector. And now we invite Mr. Anil Singhvi, Executive Chairman of Shree Digvijay Cement, to discuss the demand trends, impact of raw material price margin, as well as outlook for the sector at large. Hi, Mr. Singhvi. Always a pleasure speaking to you. Well, the cement sector on the whole has gone into a bit of a tizzy. Whether it was because of a new player that's coming in, whether it's the existing player who wants to add more capacity, but the street is getting a little bit nervous. That will reflect maybe in the next few years if in case that was a headwind or the industry is strong enough. Let's talk about the current demand trends first. What is your sense of demand on the ground in the, the area that you all operate, the western part of the country, and also the country on the whole? How have demand trends been? Go ahead, sir.
Well, thanks for having me, first of all. I think I've also seen a lot of people getting nervous on cement for some vague reasons. I can't put my handle on that. But to a specific question which you raised about demand, I think the demand is a little bit of slowdown from April. May was slowed down. Last couple of weeks of June seem to have again caught up on that. So I still can't figure it out why there was a dip in month of May. And again, June looking good just because pre-monsoon demand or something else. Unable to put my handle on that as well. But on the whole, I believe that the couple of weeks which have gone a little weak from April to June were just a blip, because I think there was some confusion which was there on account of some statement being made by government that along with the steel prices, the cement prices also will correct or come down. And I don't think there was any policy change which was warranting or necessitating that. But I think the construction industry and the dealers who deal with both steel and cement, since the steel prices came down, they were expecting the cement prices also will come down. And that is where perhaps the demand got slowed down, because they were not placing orders in the expectation and hope that cement prices will correct.
But Mr. Singhvi, morning, sir. On the ground, has there been any sort of correction in the prices? And if yes, by how much?
Well, I wouldn't call correction. I would call this of confusion, which was there for a couple of weeks because of this announcement, which was made at the same breath for steel and cement. But there was no policy framework or policy change on cement. So there were a couple of weeks when the cement prices and some demand coming down, people started giving discounts to maybe around 3-4%, but not larger than that, because cement industry unfortunately has caught up into the wrong side of the fuel cost going up. So there is hardly any room for cement companies to really reduce the prices to be profitable and return on capital. I think both are really becoming a major casualty on account of this confusion. But I think 3-4 weeks of this confusion, and then people started reading between the lines that there was really no policy framework change which was there in cement. Cement prices cannot come down just because somebody is wishing for prices to be lower. Because today also, if you look at it, how the prices have moved in last 6 months and versus the fuel prices and the coal, I don't think we have covered even half of the cost increases which have come in last 6 months. So industry's profitability has been impacted for last 2-3 months. Going forward, I expect that if the coal prices come off, which in all likelihood they should come off, I think industry will start seeing some better margins coming in next couple of months. But as of date, we are still having a bit of low demand and prices are more or less stagnating. They haven't gone up.
So not even half of the input cost spike has been passed on to the customers. I think that's the point that you're getting. And also you believe that the recent dip in demand, that was a temporary blip in nature. You're expecting things to improve from here on. If you are to give a number to the cement demand for FY23, what kind of a growth are we looking at? Mid-single digit?
I think 7 to 8%, because my point is very simple. Post monsoon, because we may still see a couple of months going because of the monsoon. Looking at the progress of the monsoon, it's a slow start. So I believe that most of June will go in good demand. Perhaps sometime in July, demand will start tapering off. But come October to March, looking at the current trend of the industry, current trend of the GDP, all of that, I think if we have a GDP growth rate of 7%, and I believe that that will be the case, I think cement demand should be reasonably good. For the year, I expect 7 to 8%, because I think by and large, cement is mirror imaging GDP for last several years. In fact, some point in time, it was even higher multiplier of the GDP. But given that we are just coming out of last 2 years of a low growth, I think we should have at least 7 to 8% growth this year.
7 to 8%. You know, the other factor that we briefly discussed at the start of this conversation was the street is confused, because the big name in there, UltraTech Cement, they have gone ahead. They are adding capacity of close to 22.5 million tons, or on the back of a 20 million ton capacity expansion that they've done in the last 2 years or so. December 2020 is when they announced that. That will be on stream by the end of this year. How do you react to this? Part of the street believes that demand will not be strong enough to, handle this supply. What's your take on it?
I think it's a question of all timing. I mean, right now, when people are nervous, if you announce a big capex, obviously you're adding to the nervousness. So I read only one thing out of it, that there was no real need. If I was into the shoes of UltraTech board and then the CEO, I wouldn't have announced this kind of a large capex at this point in time, because at 120 million ton capacity of UltraTech, they intend to go to 160 in 3 years' time. Okay, that's 40 million tons. That's adding almost 1/3 of your current capacity. That's too large. And even if I have something on the drawing board, is it not too early in the day, because they haven't announced where, how, what kind of game plan they would have for demand growth on their market share on that. So it was perhaps a little premature to have decided and then to make an announcement on that. And on top of it, right now, street is looking very nervous on cement. So you're adding to the woes of the industry on that. And that's how you're seeing the corrections coming in the all cement stocks, because they fear that there could be a fight between the two large players on account of market share and all that. But I don't think both of them are very responsible, very mature players. They won't get down to the street fight. I don't expect this at all.
Okay, but Mr. Singhvi, could there be, some sort of consolidation? Because now that the bigger players are getting bigger, could they look to, perhaps gobble up the smaller or mid-sized companies?
Let's look at it this way. My expectation is that after this big announcement by Indian Industrial House to acquire almost 65 million tons capacity and give and take about $200 per ton, obviously there will be appetite for them to go up to 100 million tons in next 2 to 3 years' time. It will, according to me, be largely on account of acquisitions rather than brownfield. Greenfield plants today are very difficult to set up in India. It's almost about 4 or 5 year game plan of that. So it's better to really look at, and secondly, you have to average it out. I mean, your cost of entry into this big business has been very high. So your entry ticket is very high. How do you really reduce it by way of averaging it out? I mean, it's a very simple math. So I expect that there will be some amount of consolidation done by 1 or 2 or 3 players to augment the capacities, to augment what they have paid today for entry price on that. So you can expect some consolidation, which hasn't happened in last actually 2-3 years. The street and deal pipeline has been very, it's almost negligible on that. So I expect that post this large announcement, there will be consolidation in industry for 2 years for sure.
Any region that you expect consolidation, first to kickstart? I know a couple of weak players. Maybe in South there are quite a few. Capacity utilization levels are lower. In the West, you have a couple of names in there as well. And the street is rife with speculation. Any region you expect, a higher amount of consolidation or to kickstart out there?
I won't go region by region, because I don't think it will be right for us to really speculate and guess on this. But my take is very simple. That 3 or 4 large players are definitely going to increase their footsteps. They are pan-Indian players. They will be looking at consolidating all market positions which they have. But one more point I want to add here is that when we look at the total capacity and look at the total production today, UltraTech's like last year capacity utilization was about sub 80%. So I think they will be first really ramping up the productivity and production of all the existing capacities. See what best they can get out of it. And second point which I have is that industry's total demand, I mean, today is about give and take about 350 million tons. If they grow by 8 to 10%, I mean, each year you need about 25 to 30 million tons of a new capacity or the productivity gain, which will be there. So I think there's enough room for next 2 to 3 years for all large players to look at both the brownfield improvement in capacity and consolidation. So I think there will be a lot of action in cement in next 2 to 3 years.
Okay, all right. Final question, Mr. Singhvi. I want you to put your investor hat on now. There's so much of pessimism out there. Input costs are spiking up, fears of demand, higher supply out there. What's your view? I remember a couple of years back when, post-COVID, you came in there and you said cement stocks are going to survive. It's a time that for those investors who are going to buy are going to make money. Whoever listened, they made money out there. What about this time around? June 2022, plenty of headwinds up ahead. What's your take on it?
I think we are back to what I said in April of 2020, and I remember very distinctively when everyone was nervous, I said, no, I don't think there's any room for people to be nervous on cement. I repeat myself in June 2022. There's no reason to be so nervous on cement. There are two factors. One, of course, we are badly hit on coal, but I don't think the coal prices can remain $250, $300 for all the time to come. They will definitely correct. Cement demand is opening up and will open up further. So I think this cost side push and also that demand being little jumpy will be settled. And I think the valuations today are too tempting. So there will be definitely investment case for cement stocks.
Always good speaking to you, Mr. Singhvi. Front foot forward, smashing it out of the park. Good hearing your thoughts as always. I look forward to chatting up with you rather soon.
Thank you so much for having me. Thank you.
Well, for the time being, though, we'll slip into a short break. When we return, we'll discuss market technicals. Mitesh Thakkar will be back with us. We'll also discuss his top trading picks.